What's up, investors? It's Mike from MJF Invest. Today's video is going to be about ticker symbol CIDM. Before I do that, please hit that like button. Really, thumbs up really helps me out. Also, subscribe to the channel for future content. Let's talk stocks down in the comments section. Disclaimer, I'm not a financial advisor. You should do all your own research. It's ultimately your decision whether you want to buy any of the stocks I talk about on this channel. Today's video is going to be about ticker symbol CIDM. It's a penny stock trading at 64 cents per share. I see some value in it. There are risks associated with an investment like this with such a small market cap. It's so early in the company's plans. So make sure you don't risk anything that you don't want to lose, obviously. But with that being said, there's a lot of positive things, some real big catalysts coming up for this company I wanted to talk about. First and foremost, cutting the cord from linear television to streaming platforms, digital platforms, leaves a pretty big gap in advertising dollars. Those advertising dollars are going to need to be filled specifically. So there's going to need to be content. They need content. So there is value in these libraries and niche type content, and that's where this fits in. This is very specific content. Well, they also have an experienced management team, a deep content rights library, leading independent multi-channel distributor. They're a leader in advertising video on demand and OTT streaming, and they're the first U.S. Chinese independent studio. They got the channel app development and digital delivery also in the works. The company's chairman and CEO is Chris McGurk. Chris McGurk has a pretty good pedigree. He was a vice chair and CEO at MGM. He was a president and CEO at Universal, and he was a president at Disney Motion Pictures. So he's a CEO who knows how to really how the best companies operate. He was, these are some of the biggest companies in entertainment. They have a robust library that creates platform opportunities and access to refresh channels. They own over 32,000 titles of premium professionally produced digital content, including 7,000 feature films, 1,600 seasons of TV shows comprised of 25,000 episodes. They got top entertainment brands, including the NHL and NBA, and Crown Media, Wildbrain, ITV, Rooster Teeth, Konami, Shout Factory, and ZDF. So the company has, quite a bit of content in their library, again, which is very attractive. They're an independent leader in multi-channel distribution and theatrical. This part of the business here, which I found pretty interesting, they lease projectors to movie theaters, but that's a dying business. They're phasing that business out. But as those projectors get liquidated, they're worth $25 to $30 million, depending on your source. And for such a small company, that's a lot of money. That ends up being like 20% of their valuation. So they could put that money to good use into their digital and into their OTT digital channels. They also produce content on their own for regular TV, but that's also not that attractive. And they also have physical DVDs, with Redbox, and you could buy them at Walmart and, on Amazon and all that stuff. But, that's revenue, but again, not the attractive part of their business. The attractive part of their business is the digital and the OTT channels. Right now, they're operating 8 OTT channels, either they own or they're partners with. So that's pretty cool stuff. They produce movies as well, like low budget movies that will go straight to TV or straight to Netflix. Netflix will rent the rights or that kind of thing. And this is the global footprint that they have with their top distribution partners. The Roku, Sling, Now TV, Amazon Prime, Hulu, HBO, Showtime, YouTube, Netflix. I mean, their distribution partners are, top notch. And then, the physical retailers, Walmart and Target, that's where they're selling their DVDs. So they're in there with the top retailers digitally and digital distribution as well. Bamboo, Combat Go, the Bob Ross channel. The Bob Ross channel could be found right on Roku. They also have the Dove Channel, docudrama, Con TV Anime, and So Real. Like we were talking about earlier, it's very niche content, but it's underserved demographics that advertisers still find value in. Infrastructure, relationships with 60,000 digital and physical storefronts, reaching 93% of connected devices with a unique and preferred relationship with China, which is what I really found interesting as well. And I wanted to talk about their relationship with Bison Media. Bison is the majority shareholder, and they have pretty good ties. They have close connections with ties in China. You've seen that pretty early in helping the relationship for CIDM. Right here, China Intercontinental Commutation Center, or the CICC, which is described as the National Geographic of China. That's pretty cool. They also helped seal 6 other partnerships in China. One also for being their film distributor, their independent film distributor, which is called Starrise Media. CIDM took a 29% stake in that company. But it also should be noted that the company is worth less now than when CIDM took a position. So that could be a sign of a bad judgment, or that's probably why that's one of the reasons why I wouldn't, one, make a substantial investment in this company, and 2, I would definitely set my stop losses, my risk tolerance. Like, I would keep an eye on it. It's not like I would just like set it and forget it. I would keep an eye on this trade. I would have my stop losses set. But it does have some pretty good upside. And they were particularly active in the month of December, which is really cool. I think here, right, the Weather Channel local now expands to OTT streaming offerings with the CIDM distribution partnership. They also reduced their total debt by $24.4 million, which was 47.4%. And their annual interest expense by 37%, or $1.6 million, compared to December of the previous year. They also partnered with SphereX to expand their international content distribution capabilities. And now the Bob Ross channel is available as a free standalone app on the Roku platform. And they closed acquisition for the Film Detective. So acquiring more content, building up that library, all very positive signs. I wanted to speculate a little bit. If you look here, a company like Pluto TV was bought out by Viacom for $340 million. I could see a similar fate for ticker symbol CIDM. I could see a bigger media company coming along. They're trimming up their debt. They're adding to their content library. They could be making themselves more attractive, more visible for a bigger company to come along. That should be on investors' radars. So that's what I'm expecting. I would set my stop losses, though. I have low risk tolerance for this trade. I would not, ride this one all the way down to 45 cents if it went there. I would set my stop losses at support. If it broke support, I'll move on to the next one, cut my losses and go. But I do see some upside. So, I wanted to bring it to your attention. If you're still watching, thank you so much. Please like and subscribe for future content. Let's talk stocks down below in the comment section.